All right. So according to your reporting, last year, 2024, sales to continuation funds, they hit a record 13%. Are you seeing that same trend this year?
Yes. In fact, we're seeing it even more. They accounted for 19% of all private equity exits in the first half of 2025, which is up from 7% in 2022, according to Jefferies. So really, they're on track to be about 20% of exits for this year.
All right. So it's about 20% of exits for this year. It's obviously a big jump from 13%, but I want to ask you about the dollar basis. That's the volume. What about the dollars? Are these a lot of big deals going into these continuation funds or big sales where PE funds are, again, selling to themselves?
So they can't. It's a dollar. The dollar volume obviously is high overall, but each individual deal is not that big because they need to raise specific funds dedicated to continuation funds. So you can't sell every asset to a continuation fund because there needs to be enough capital to basically buy up that asset.
Okay. One of the reasons we want to talk to you is that we talk a lot about that circular funding when it comes to the AI trade and the AI build out. This seems very similar. Are you seeing clear parallels here?
It's not exactly the same because if you think about it, you're selling to the same manager, but in a lot of cases, you're replacing a lot of the investors. So you're taking the LPs, the limited partners in your fund, and you're going to them and you're saying, do you guys want to stay into this deal or do you want to sell out? And in a lot of cases, LPs really want the cash right now because they're waiting for these private equity companies to be sold. And so they're cashing out, and the investor base underneath the underlying manager is being turned over. So it's not exactly the same. The ownership is changing in large part, but the manager is staying the same. And the carried interest that manager stands to receive could be resetting, and they could be then receiving new incentives on the deal.
Okay, so you don't seem overly concerned about the idea of it being circular funding, or it may possibly be creating a structural issue, but I do have to point out these continuation funds, they actually popped up right after the great financial crisis. And that seems to raise a red flag, I think, for a lot of people. Anything that's kind of a parallel to that time, very similar to the circular financing, kind of as a parallel back to the dot-com bust. The fact that they popped up after the great financial crisis and were a response to a lack of liquidity, aren't there reasons there's not a lot of liquidity out there? I mean, the fact that they're able to use this to circumvent, could this be a troubling sign going ahead for private equity?
Well, it's a troubling sign because it shows that they're not able to take companies public or sell them at the valuations that they want right now. And the question is, when is that dam going to break? When are firms going to be able to start offloading some of their assets at the prices that they want? And a lot of these assets are, companies that were bought back in 2021 during the boom times for private equity before the Federal Reserve rapidly raised interest rates. So they don't want to sell these things off at a loss. People aren't, interested in selling at below the price that they were dreaming of. But, the reason that PE deals, as you noted before, are slow is because they haven't been able to, find a way to exit them. And, a lot of firms are saying this will be the year. 2026 is going to be the year when we can start to sell some of our assets. We'll see if that's the case. I think that the challenge may be that during 2025, a lot of people use continuation vehicles, but they were only able to use them to sell some of their best assets because there's only a finite amount of capital, as I said, to do these continuation deals. And so they, were able to, to do it with their best assets, but can they do it with their B-grade assets? Can they do it with the next level down?
It sounds like we're going to find out in 2026 because you said it's now 20%, jumping from 2024, 13%, now expected to be 20%. So I think we're going to find out.
We are.